let's bring in Kevin Green, senior markets correspondent, to help set up the action today. KG, let's talk about where things stand with the S&P 500. We entered correction territory. It looks like we'll have a bounce today. We didn't hit that low that you said to watch out for yesterday. 5,500 was that level that you said. But where do we stand? How would you characterize where we are now?
Well, we got fairly close to that 5,500 level, and then we did see some buyers kind of stepping in here. And I would say, knock on wood, that we actually have a green day today, because we have seen some fades as the market in pre-market does kind of move up. And then we do see some aggressive sellers coming into the market here. Look, I mean, we are in the correction territory, but if you kind of look at the price action yesterday, what was actually very interesting is the semiconductor names. Yeah, they did see a little bit of pressure, but they're holding up for the most part, especially NVIDIA. And this could be maybe the start of a little bit of a counter trend or a counter rally here, especially when it comes to high beta tech names that we know and love. And so what I'm looking at for today is not only just aggressive volume just hitting the market itself, potentially maybe a little bit of a green day here, but also maybe a little bit of a rotation out of these defensive sectors like utilities and staples, which have already seen a little bit of pressure to the downside here, Diane. So if we're kind of looking at upside potential, 5640 is kind of what I have on my radar for the upside. To the downside, looking at 5450, but 5,500 is going to be a very key area, and that's why we saw that strong bounce once we kind of got around like 8 points, 10 points away from it.
If we do, let's say there's not a fade, let's say there is a move higher today, would you consider that a dead cat bounce?
You would have to see a follow-through day for a dead cat bounce, right? I think right now you would have to kind of consider it as a little bit of a short covering rally until the data shows otherwise. And what data would I be looking at is the change in open interest for the E-mini S&P 500. That's going to be very key here. But once again, we do have the University of Michigan sentiment data coming out today that has been a very negative indicator, and the market may be already bracing for even a worse print this time around, which once again, kind of low bar. If we exceed that, could that be bullish for the market? And then we have to look under the hood too, because they do kind of split out between Republican and Democratic party there. And so what I would actually focus on is the Republicans. What is their sentiment looking like on a month-over-month basis? And if it's getting a little bit worse, that's the base of the president right now. That probably is a little bit more of a stronger indicator than maybe Democrats who already believe that we have, I think it's like 5.5% inflation expectations on the Democratic side. So that's why this number is pretty skewed when you're looking at the 1-year and 5-year inflation expectations.
Let me ask you this. In terms of, at the start of this year, there were a lot of analysts calling for a correction. Does this seem to be like a healthy reset, or is there a deeper structural concern potentially?
Yeah, I think it's normal for us to see a correction. So I think this is actually healthy to kind of reset valuations, especially if you're looking at forward multiples. Now, you could also say that we still have maybe some room to the downside when you're looking at forward multiples. We are still relatively expensive if you're looking at the 5-year or even 10-year average for forward PE. But the thing is that when you have these bear markets, it's usually several different black swan events that hit kind of at the same time. And one of the bigger ones that is a concern is credit risk. And we're just not seeing that right now. So I think you have to treat it as a little bit of a pullback and correction until we get further data. And there's obviously a little bit more concern when it comes to tariff policy, but those tariff policies may change once we get to April 2nd. We don't know what's going to actually happen yet. And if we do see a little bit of a redirection from the White House, that probably will put some bullish enthusiasm for the market. So I'm kind of like holding on here, treat it as a correction. Long-term charts do say, Diane, that we're still maybe expecting some downside here, 5 or 8% to the downside if you're looking at the monthly or the weekly chart.
We don't know what's going to happen, but it sounds like the latest comments from President Trump are that we will see more tariffs on April 2nd. Let's talk a little bit about the price action in gold. Gold rising above 3,000 today, new level. It's last year, gold and the S&P 500 rallied, but this year, gold really outpacing equities. Talk to us about what you're paying attention to here, KG.
Yeah, so gold has been able to sustain its price. If you kind of look at the price action over the last 3 to 4 months, gold has been treated as more of a risk-on asset with the S&P 500, but now we have seen that break because of this risk-off tone within the market, and then the structural nature of the gold market in general. We saw basically a physical short covering event that took place. Last time that we saw this aggressive repatriation of gold, physical gold from Europe to the United States was actually back in COVID-19. And if you look at the COMEX warehouse warehouse inventories for gold. We're hitting all-time levels right now. What I actually am going to be looking forward to here is, obviously this is a milestone. Gold usually tries to hit milestones, and then that's when we see maybe a little bit of a pullback. And if we don't see these aggressive notices to receive physical gold, if that doesn't continue, then you kind of think to yourself, how much more can we actually go to the upside for now? So I would be a little bit cautious when it comes to the price action, just because, once again, the structural nature of the gold rally is something that's more generational in nature, rather than just straight up cycle behavior.
So the momentum might not be sustainable. Is that what you're saying?
Yeah, and you're seeing that with the RSI right now. If you're kind of looking at a lot of the oscillators on a daily chart or even a weekly chart, you are seeing some bearish divergences, meaning that the price action is pretty much stalling out right now. Yes, we are hitting a little bit of highs here at 3,000, but if you kind of look at the price itself, we have been kind of consolidating here, which makes me a little bit concerned. Now, it could be a consolidation and then a push back to the upside here, and we continue to run, but gold usually doesn't perform in this manner, and I'm looking at actually March 28th. That's actually going to be a very key date, because that's when the open interest, or basically the contracts that are active right now, where these dealers or these bona fide hedgers can actually start putting in delivery of intent notices. And that's something that actually occurred the last time around in the January contract, which is why we saw the push.
Okay, I want to talk one mover that we're paying attention to on the equity side. DocuSign released their latest quarterly numbers, shares higher. Take us through some of your takeaways.
Yeah, once again, very low bar when it comes to this earnings announcement. You're seeing the shares up around 8%. Now, they did actually beat on the top line as well as the bottom line here. Adjusted earnings per share came in at 86 cents. Street was looking for around 85 cents. And the revenue came in at $776.25 million. It's a 9% increase on a year-over-year basis. Street was looking for $761.31 million. Now, if you're kind of looking at the top and bottom line, you would say, okay, those aren't significant beats. Why are you seeing an 8% rise? And I believe that's actually becoming because of the future billings, not only the billings that they reported for the quarter, which came in at around $923.2 million, which is around 11% increase on a year-over-year basis, but their guidance for billings was actually a lot stronger than the street's expectations. And billings is really kind of that forward metric when it comes to top-line revenue, and then their expectation that they're going to see a little bit of a reacceleration or an expansion of gross margins, then also kind of flows through the bottom line there. So I think that's where you're seeing some of this optimism, and then once again, a little bit of a low bar. They're starting to see some traction when it comes to the AI software product offerings that they're putting out to the street right now. So decent earnings announcement, nice little pop.
All right, thanks a ton. Kevin Green with the breakdown on DocuSign and what to pay attention to on the levels for the S&P 500, to the upside 5640, to the downside 5450. Thanks a ton, KG.